Man, I've been slaying NAS 100. Been killing it. It's murder. Looks like we working our way up, right? We had Red Photo News drop a few minutes ago. Negative news, y'all. This is fluff. This is what ICT calls fluff. Look at that. That's weak ass negative news. It didn't do anything to the markets. All this is doing is causing a slow decrease in the dollar. They're going to push down in order to drive up. NAV 100 caught me right here, but that was my bad. I ain't used to trading London Open, you know, and I was really looking for the London Open kill zone, and this is what I was looking at, but I shouldn't have been looking at that. I should have been looking at this. There's that purge of sell-side liquidity. And when that happened, I just got off the charts and I came back on and I got in right here and I took profit right here. All right, so I had a little moment right here. I wasn't mentally ready. That's what happened. Then I got in 2 times right here. All right, I rolled it up. I took profit there and I closed out the rest of my partials. 3 right here. This is the trading view executions, okay? I tried to buy here on a separate account, got stopped out, placed 3 positions right here, closed, stopped out at break even, same, no, I bought again right there, stopped out. So I bought, as price traded up here, I bought again, stopped out, bought again, fair value gap, bought again, as price was doing this. Euro USD. All right. I bought right there. Stopped out at break even. Took another L right here. And I got in right here. I'm just fucking around on this Monday. Not really taking anything too serious. Just having fun, getting in sync with the marketplace. Seeing price go up is a good thing. That's what I want to see. I think this is another buy entry right here. Y'all, these NAS 100 buys are looking sweet and letting y'all know that now. That was a good one. Price might come back down in here, but if not, find another pattern like this. What do you usually risk per trade? I say 2-3%. Sometimes I'll risk more than that, bro. I'm not gonna lie to you. I'll drop 20-30 lots on Euro USD when I'm feeling real good about it. Just say, for example, a trade like this. This is a classic bread and butter New York Open kill zone trade. I got in it right here. I'm not trading this live, by the way. I'm just strictly paper trading, getting in sync with the marketplace. You heard me? But if this would have been on a regular day, today's Judas swing is right here. You got Asian session right here. London sessions, Judas swing is right here. Right after that occurred, you get that Judas swing. There's that displacement, shift in market structure. New York open kill zone. Boom, pow, wow. So, like I was saying, I'm not trading this live, but if I was, I would have easily dropped 10, 15, 20 lots on that trade. And I would have took profit right here, just like I'm about to do now. New York also has Judas swing. Um, I wouldn't that's not really how I was taught. Like, yeah, you do want to see New York session retrace, run out some type of liquidity, and it did happen, right? Right here at New York Open, I guess you could say this is a Judas swing, but that's not the way I was taught. Like the Judas swing occurs during London. The Judas swing is essentially the manipulation phase in the power of three. All right, so let's take midnight open price because this is where the true day starts. There's your New York midnight open, right? So if we are anticipating higher prices, which we were, then you want to be participating in buys at or below midnight open price. Okay. Check out where I bought in at, right? All this plays a part in my thought process when I'm looking at the charts. I'm not saying you get in here and watch midnight price open and watch all this shit happen. Like it's not a good idea to do that. But I'm just trying to break down to you the daily range. And it's the exact same. It's the same thing that we look at on the weekly perspective. So let's first start off with this consolidation. There's your Asian range, consolidation, accumulation, right? Here's that manipulation, aka the Judas swing. After that occurs, you have your distribution. All right. And call this what you want to call it. Distribution. I I just it's just the part of the distribution phase. So we're just gonna do this. Accumulation, manipulation, distribution. This is what every single day is gonna look like. This is a classic ICT buy model. Buy model. This is a buy day, up close day. Now you're probably thinking, what the fuck do I do with this? And what the New York opening price has to do with it. All right, so we all know that the daily candle truly opens right here. This is where the new daily candle opens at 5 o'clock. It opens at different times. I think on the DSY it opens at a different time. But I think all the currency pairs opens at 5 p.m. New York time. But this is not where we don't pay attention to this part in price. So says the boss. ICT, right? That's what he says. He calls this the true day, midnight opening price. And like think about it. It makes plenty sense. If you back test this, there's something happening right as midnight kicks off. Okay. There's something happening. I don't know if that's when if the data range, the algorithm kicks in. I don't know. You know what I'm saying? Look, I have no fucking clue, right? And this is full transparency. I don't like to admit this. Nah, I'm just playing. I don't give a fuck. I don't know if this is real buying pressure, selling pressure. I don't know if it's ICT himself fucking pulling the strings. Like you would think so, how accurate this shit is, right? I don't know what causes these markets to tick, tick, boom. I'm just getting in line. I'm just following a layout that was laid out in front of me that I really, really like. I really like that, this layout, okay? So that Judas swing right here gives us that purge of sell side liquidity. This is why I be trying to tell y'all don't fuck with London. That's why I be trying to tell y'all don't fuck with London. What looks better right now? What setup looks better? Be honest. Who in here? Oh, we got a Tom in the waiting room. Who is Tom? Midnight open New York time is 12 a.m. What's the 5 a.m. Sunday open? What's the 5 a.m. Sunday open? There's no 5 a.m. Sunday open. This is 5 p.m. This is what time the markets open up on Sunday. Is at 5 p.m. New York time. And then we just fuck around. And then that's when midnight hits. Did I really catch the midnight opening price on the head? Man, look, bro, I was literally a pipette away from from that midnight opening price. And that's some shit. Looks like my baby's this is my baby. This is my new baby. I told y'all to look for another setup on NAS, right? This was it. That was probably it right there. We watched that play out. It literally happened so fast. This 1 minute candle opened up. It spun a half a second. Institutional order flow entry drill right there. I love to see those. I don't know why. I love to see those though. I swear, dude. Love to see it. Me and Nas 100 been going back and forth all night, man. I swear to God. So let's do this, y'all. Let's mark out that midnight opening price. Look at that. It didn't come back. We opened up, we dropped down, and then we took off. When I seen this happen right here, like I just knew. Like the market literally opened up. Right when the market opened up, it just tattletaled on itself. Displacement, fair value gap. I'm telling y'all, man, there's something about the way the market gaps up like that, that aggressive push up to take out a short-term high. There's something about it that is so solid of a setup. I'm telling you, I don't know what it is, dude, but I love to see it. I love to see it. That's a fair value gap. basically coupled with a order block, a mitigation block. That's classic, man. That is classic right there. And I just been riding this thing up. There's that Judas swing right there. Your purge of sell side liquidity. We trade up, taking out this high. And then we retest back down into this. Let's look at the 1 minute. It looks better. There's that Judas swing. And here's that London open kill zone. Bread and butter. Fair value gap. Aligning with that equilibrium. Targeting this high. That would have been a trade right there in itself. And it took 17 minutes. This is the type of trades that I be looking for. For real. Here's another trade opportunity. And what did I say a while ago? There's something about that displacement that takes out a short-term high. There's something about it. Price comes right back into it. 40 or so pips from EU daily order block fair value gap. Is it better to trade London with indices? Nah, don't get me talking about London, bro. I'm telling you, I do not fuck with London. Like, I couldn't sleep last night. I didn't feel good. So I was up. So I was just playing around. You only paper trade London. It's not that I only paper trade London. I hardly ever trade London. I did execute a couple trades on my live account last night. I'll post them in the group. I just don't like to trade London for a couple different reasons. Because this is literally the middle of the night where I live. And you don't always get this type of price action. Like this right here, the Judas swing happened right after London opened. And then we started working our way up. And then we started to, we got a continuation in New York. That's not typically what you will see. I mean, it does occur, right? But you can't get in that mindset to where you think you're going to see that happen all the time. Because what I'm used to seeing the majority of the time is Asian session, accumulation, and then we'll spend our time during London, that Judas swing, during London, and then New York session will give you something like that. You know what I mean? To avoid bullshit, I just try to teach everybody to stay away from London, man. Why? I mean, look at why. Like, it's right in your face. Look at why. Like, look at what's going on right now. We didn't get this during London. Like, you're not gonna see the type of volatility during London that you're gonna see in New York. And I don't want y'all to get too caught up, like trying to, especially if you're a beginner, don't get too caught up trying to fuck with these lower time frames, man. I'm telling you, it's not a good look. It's not a good look. You need to. That's why I was telling somebody in my mentorship last night. If you can't incorporate and trade the daily time frame with the hour time frame, then you definitely don't need to be trying to incorporate the daily and 1 hour with the 15, 5, and 1 minute. It's just not logical. It's just something that you don't need to be doing. Another question, when do we anticipate to either buy or sell above or below midnight price? What indicates that? Well, midnight opening price is what indicates that. And you need to be, this is the perfect example of that, Tate. At New York Open, here's midnight opening price. Here's our current dealing range from this swing low to this swing high. Looks like price reacted off of this 5 minute order block. It dropped down to a 1 minute. Yeah, it looks like it just reacted from that 5 minute order block. Like I said, you don't want to be looking at price around midnight trying to determine whether you can buy or sell above or below that opening price. It's not, I mean, you can't do that. You're going to get caught up. There's 3 phases to the market at that daily range. And it's the same thing that we look for on the weekly range. All right, y'all. So price just dug up into my POI from my weekly watch list, right? It just dug up into there. So when 9:30 kicks off, I'd be interested to see what happens because this is a bearish breaker. I want to see price dig up into it a little more because this is a bearish breaker. We have this rundown prior to the purge of buy side liquidity, displacement, retracement, and this is what I want to see. Okay. But I'm going to be patient. I'm going to be patient because price could bypass this fair value gap. And looking at the lower time frame, all right, so this is our breaker on the higher time frame. This push down prior to the purge of buy side liquidity. But looking at it from this 5-minute perspective, price could very well play off of this series of down closed candles. We have price pushed down, and you have this last down closed candle, which happened at 8 o'clock on the dot, New York open. That's where we get that purge of buy side liquidity and that displacement to the downside. And this is what I was telling you about a while ago and why I don't fuck with London session, because too many times this happens. How can you get in something like this? You need to wait on that purge of liquidity. That's why our trading rules are in place. If anybody has any questions about the trading rules and you don't have them, let me know. I'll give them to you right now. I want y'all to pay attention to my trade management too, right? I already done phased out a majority of my positions, especially on NAS, because we're trading up into a POI, right? Just note how my take profit is not up here. I'm not targeting this. This is what a counter trend trade is supposed to look like. This is a counter trend trade. And you have to understand you have to phase out of your position as price is trading into the other side of the dealing range. So you can use your field for take profit, right? We're phasing out as price is digging up into that equilibrium. We are simply trading from a discount to a premium, and then we're going to sell from a premium back down. But this time, once we're trying to get in sync with the trend, right? We could buy from here, ride it up, take profit, get in a sale. But when we get in that sale, if we're confident in our bias, we're not going to be trying to phase out of our position like we did here, right? So as price is trading down, it's true that price could stop on a dime at that retracement level, pull back and do that to take out previous day's low. But it's not ideal for you to, I mean, don't get me wrong, I do close partials. I pay myself, you know, but I'm just saying my headspace is not the same. You wouldn't really be trying to like phase all the way out of your position as prices coming down from this dealing range. Because, I mean, it's obvious that price is not, you get what I'm saying? I mean, it's just bearish. It's a mug. It's bearish as a mug, a bear mug, a, a bear hug. All right, let me get back over here to my trading rules for my boy. Yeah, previous day's low would be my first. Would probably be my target overall, dude. This is a trade. I mean, expansion, retrace. That's a solid trade. Now, yeah, I mean, look, man, you need to find out what kind of trader you want to be, right? Your personality. God damn, Mia. Excuse my language, y'all. Can you be any more louder? Hey, let me let my dog out real quick. Telling y'all now, boy, when you hit them 30s, boy, your knees go to screaming all the damn time. He said now he wants to excuse his language. Yeah, because I said the GD word. Any other cuss words, I really won't try to excuse them. I'm telling y'all, man, them 30s ain't no joke, boy. I don't feel young no more. What was I saying? Oh yeah. All right. So when price takes out an area of liquidity, such as an old daily low, there's a high probability that we're going to retest. Okay. So if we drop from here and price takes out this low, unless it's some crazy news event and it goes straight down, like if it jams down very quickly, then I would definitely close a partial and leave more than half of the position on, okay? But if price just kind of, it's just like a balanced price range, it's just, giving you that bearish structure, there's a high probability that as soon as that low is taken out, we're going to get a retest on this expansion down. And that will just simply give you an opportunity to get back in and ride price back down. Understanding that will be a blessing to you, no doubt. This is our target, these relative equal highs, fair value gap, just to let y'all know. But let's get into it. This is what you want to look for, man. And just simply abiding by these 3 simple rules is literally gonna help you so much. It's gonna keep you out of bad trades, bro. It's gonna get you in good trades. And I can show you so many examples of this right here playing out. Just right here. All right, look. Let's look right here, for example. Okay. Well, I tell you what, we'll just start from the left and work our way over. All right, so keeping this in mind, don't forget that you have other rules, right? AMD, for example. These are other rules that should work hand in hand with these. All right, keeping that in mind. Accumulation, manipulation, displacement, fair value gap. So there's our AMD, right? Check. I bet you this happened on Tuesday or Thursday. All right, so we got that. Now look, right here, trading rules. Here's your clear purge of liquidity right there. The shift in market structure occurred on the lower time frame. Possibly in there somewhere. If you want me to, I will drop down a lower time frame and show you the shift in market structure. It happened. After that purge of liquidity, that shift in market structure happened. Okay, so we got that. We got that. Now we got to identify a fair value gap. On the daily, it happened there. Now I'm pretty sure we can get on a lower time frame and watch it play out in this area. Right after that purge of liquidity, somewhere in within these 2 daily candles, this is occurring on a couple different time frames. Okay. And plus, this is a weekly fair value gap. All right, so right here, it occurred again. Accumulation. Why am I using this damn marker? It just kind of seems like the right thing to do, like a teacher type thing. All right, accumulation, manipulation, weekly fair value gap, distribution. So we have AMD. We had that power of 3 happening right here. Now let's look at our trading rules. Clear purge of liquidity. Check from these relative equal highs right here. Then relative equal highs, that's your purge of liquidity. Clear shift in market structure. Same thing that occurred in here somewhere. Rule number 3, identify displacement fair value gap. And for those of you who was with me during this time, y'all know that I called this exact area out. Called it out. And it hit for like 500 pips. Any questions? Does that confuse anybody? Do I need to elaborate on anything?
Not for me. I'm good. I'm good. I'm good.
Okay, good. It's really that simple, y'all. I know like y'all probably think I'm just trying to simplify it, like, but it's really that simple. It's that simple, seriously. All right, we got 5 more minutes, y'all, and it really looks like prices is starting to do what we want it to, okay? It really looks like prices starting to do what we wanted to. Now it's dangerous trying to pick a top, and this is what I mean. Like this kind of looks like a trade that I would be willing to risk. It's a very small stop loss. It's very small stop loss. We could sell from right here inside of this fair value gap. And if it doesn't go our way, it's a very small risk. But if it does go our way, it's a very, very, very high reward. It's not really clear yet what price is trying to do. We did dig up into this fair value gap, okay? We pushed down, leaving a fair value gap. It's not a big one. That's why I don't like it. The displacement isn't big enough. But we did take out a short-term low. You see it that pretty much invalidated the trade for me when it violated that fair value gap in this order block. So it's not ready yet, but this is an example of something like what you would want to see. Price dig up into the higher time frame fair value gap. The 1 minute time frame is pushing it. You really want to see something like that occur on the 5 minute. Like a nice 5 minute displacement, taking out a short-term low, and get in on the pullback. But like I said, we want to see price dig up into that more. We want to see it dig up into it more. Because look, if you're trying to sell something, right, you want to sell it at a high premium. If I say if I say, hey Dustin, sell me your car, bro, are you really gonna sell it to me for what you bought it for? Probably not. You want to sell it at a high premium because you want to profit. So I mean, anything from 50% up would be considered selling at a high premium. Ideally, this area. But it's not the Fibonacci that we're entering this trade off of. It's more specific than that. It's not Fibonacci. Although the Fibonacci it is a great tool. It is a great tool, especially when you're in sync with market structure, right? Like right here, for example, from this swing low to this swing high. The dude who created the Fibonacci tool was like very observant, you know? He realized that price tends to, reverse after the expansion. You get that retracement, like that was brilliant. And I know a lot of people who really just trade Fibonacci, but it's not enough confirmation for me. Now that is beautiful confirmation. Fair value gap lined up with your kill zone levels. That's beautiful. Right before the market closed on Friday, oh, look what I just noticed. We got a balanced price range right here. For those of you who want to see an example on that, where's your balanced price range? Where's it at? I spy with my little eye right there. Let's look on the 5 minute. Nope. It's more clear on the 15. This is a balanced price range. You got that single pass down, that single pass up. Price comes back down and reacts from it. We also have one here. We got a single pass up, a single pass down. We want to see price react from this area somewhere. This fair value gap might hold up, might not. You have to keep in mind what price looks like on the time frames below where that fair value gap is, right? This we would kind of try to refine our entry. We got one here. And then we have this balanced price range up here. We can go ahead and delete this. Price is shooting through it right now. So we have a couple more POIs up here. No, No. For those of you who are thinking, that does not mean you go in there and do some shit like this. Sell limit or market execution as soon as price hits that level. No, it does not mean that. These are simply trade ideas at the moment. They're simply trade ideas. We want to see price react from this level and give us some bearish structure on the lower time frame. And I understand that's frustrating for people who signed up for my signal service. Like people who want signals, they want to be able to receive limit orders, right? They want me to give them a price like this. This is what they want. Imagine this, y'all. Now I can do it. I've did it before. And like just hear me out, right? Just hear me out. Just imagine me sending out a limit order a couple days in advance. All right, put a sell limit at 1140. I mean 11,140. And price does this. You know what I'm saying? Like, don't get me wrong, bro. Like, I've done it before. I can do it. Specific situations, you know, it's just more risky, bro. It's more risky. Opposed to like, look at this. If price reacts from this level, we could sell right here, right now, and take that risk. We could take that risk. 100% take that risk. But why take unnecessary risk when you just just wait, just be patient. Just be patient, man. If price like we're not gonna miss out. People have FOMO, fear of missing out. So if price starts to develop this bearish structure right here, and I shoot out a trade signal and say, all right, for example, this is probably not a good example because it didn't play out. I mean, it worked out for somebody who would have took profit at that high right there. But, buy limit right there. And literally 5 minutes later, it activated. It activated, drawdown, and then jammed up in profit and ran for like 15, 20 pips. Took out that high before the Judas swing happened. It's just, you know, here's an example right here. GJ. Send it out, I don't know, right at New York Open. And that happened. So about an hour or two later, it activated and ran for a beautiful game. See, if if I would have sent out a limit order, this would have been probably been a POI for me, and I probably would have been like, okay, let me send out this sell limit to my signal group, and y'all would be hollering right now. Oh Lord, My account's in drawdown. I'm about to blow it. See what I'm saying? I have people mad at me. This US 30 POI meetup. I haven't looked at US 30 to be honest with you. I don't have it on my watch list. I try to stay away from it to be honest with you. To be brutally honest. But look at what these two are doing, and you know what US 30 is doing. The exact same thing. Let's look at it. It's the leader of the pack, as always. And this this is our order block. Let's narrow it down 50% of it. I wouldn't want to see price get up above this 50% area, this order block. But you want me to tell you why I would not sell from this area? And probably why I won't be selling from the area on NASDAQ or SPX? Because look at what time of day it is. I mean, time of week it is. Accumulation, manipulation. What do you think price is reaching for right now? And you know what? I'm glad you told me to look at US 30 because that just really made me realize that I don't think price is retesting from the expansion down. I think price is reaching for liquidity, bro. Like just like we know, it's reaching for this high. It's gonna take out this high before dropping lower. Watch and see what I tell y'all. Watch and see. This looks a little more cleaner than US 30 does it not? It does. It really does. That's why I was thinking like, okay, maybe it's just retesting from this expansion because this is like a classic setup. This is like something you want to see. But you want me to tell you what kind of invalidates this? It's time of week. That's what invalidates it. In my opinion, I could be wrong. Price could just react from that entry right there and just go straight to hell. I don't know. But I mean, US 30 taking liquidity would form divergence maybe. Higher high to NAS lower high. That's that's a possibility, but it's not something that I would truly anticipate to happen. Anticipating a divergence isn't something I find myself doing at all. That or actually looking at divergence is something that I really never ever do, believe it or not. So, y'all can take that with a grain of salt. If y'all want to throw divergence into your trading plan as an extra confluence, it will only make your trading plan better. You hear me? I just don't find it necessary. I don't find it necessary. People could argue with me about that, but I just that's just how I look at it, man. Okay, that's that daily fair value gap. I've been looking at this area though. All last week, I was looking at this area. So let's see if we can get up in there. Take out previous week's high, completely fill in that daily fair value gap, and dig into the daily order block. So let's do this, y'all. Let's take this daily order block and split it in half. And let's highlight that 50% area, okay? Let's do that. Let's look at the weekly, and that kind of makes sense because I mean we'll still be inside of this weekly fair value gap, and that here's previous week's high. That's important to note because that's our next draw on liquidity, okay? Buy side liquidity. All right, so I know this kind of looks like a hot mess. But at least it don't have I gotta do it, bro. I gotta do it. Hey, look, I gotta do it, y'all. I got to, man. I got to. Oh, wow. Don't do that. Let's see. Let's find one. Let's find one that's trending. What's a position tool? Click at the point in time where an order is placed. Using the order's entry level, the trade will be entered when this level is reached. Oh, yeah? You serious? You pulling my leg. Click at the point in time where an order is placed using the order's entry level. The trade will be entered when this level is reached. Y'all, what the fuck are they talking about? Let's click. Let's click again. Let's click again. What the fuck? Oh, so hey, this is pretty cool. So it's like a position tool, like what I regularly use, like right here, right? Except for, is it like a sell limit position tool? Like here's our entry point, stop loss, take profit. Hey, this might be kind of cool though for people who want to do their limit orders, right? Can I get somebody to chime in on this with me, please? It's staying right. Let's make it a little darker so we can see what's going on. I don't want it to extend right, damn it. All right, so I'm trying to see something. Position isn't open yet. Huh. All right, so we're gonna check this out, y'all, for real. I want to see if a trade really opens up right here. I want to see if this is really what they're saying. Oh, yeah, right there. What the fuck just happened? What just happened? All right. I just got sidetracked like a motherfucker, didn't I? All right, here we go. All right. Boom. All right, so look, y'all, this is what we're gonna do. When that motherfucker says, uh, short, when it says short, this is the Vinny E mini damn, Vinny E mini algo box. When the market says, damn, when the market says short and them candles turn red, we going short. You heard me? This is what we're gonna do. And see, the candles has to close 5 times above the blue line. Okay? All right. So, man, I used to have so much faith in this, y'all. Not this exact thing. I don't know what the hell this is. But I used to look at moving average crossovers, you know, and hey, look, I'm gonna tell y'all some real shit now. There was this black lady on YouTube. I cannot remember her. I'm pretty sure I could find her if I really look her up. But she taught me this moving average crossover, right? This strategy, this moving average crossover on the 5 minute time frame. And I made money with that. I ain't gonna lie. I made money with that. Sure did. Let me show y'all. I'm I'm pretty sure I'm not gonna be able to remember the exact what you call it. Why did it just pop up like 50 for freaking lines? All right, 6 and 20. That kind of I think 6 and 20 is close to the amount that I had. It was somewhere around there. I know it was kind of lower. Why does it keep doing that, man? I don't like that. All right, so the strategy kind of went like this, y'all. Um, it was a 5 minute time frame strategy with two moving averages, and it was small, like small moving averages, like a 6 and a 20, or maybe it was like a 5 and a 18. I can't remember. It was a small one and then a fairly large one, right? And I remember making money on the strategy, bro, for real. So you wait on the crossover and wait on like the second or third candle to close above and then get in. And I did see a little profit on with that strategy. I was solely just using that, you know? And it's crazy to think of now. You get that crossover, and right when the market's crossing, price would be right here. So we probably would have got in on one of these two candles right here, rolled up. But y'all please don't use moving averages. Please, I'm begging you. Don't do it. Hey, does anybody know how to do this? Does anybody know how to do this? I really want to do this. For real. I really want to do this. I want to put my strategy in here. I want to put my trading rules in here. And I want the market to just do a series of like 1,000 trades using my trading rules. Dead ass. I wonder if I can get that to happen. I don't know how to do it, bro. I really don't know how to do it. I don't even know where to start. All right, looky. Here goes Cookie. We're reacting. We're reacting. Now, if I would have sent out this limit order, then somebody would have been happy. Hey, I ain't gonna lie, I kind of miss trading limit orders, man. I still, like I said, I still do it every once in a while, man. But it's nothing like how I used to. It's nothing like how I used to. Let's see something. Let's get down to the nitty gritty. I like that. Coincidence or no? That's the low of the 5 minute order block. All right, so this is the low of the 5 minute order block. And this is the low of the fair value gap. So this is the high, this is a fair value gap. This is the high of the fair value gap. This is the low. So 5 minute order block plus fair value gap. I like it, y'all. I really like what price is doing right here. So let's just be patient. Let's just see. It ain't broke structure yet. Let's get down here first. Let's see if we can get something like that to happen. Tay said, try it. Just click on it. All right. Whatever you say, Queen. Oh, so you want to take me indicators, yeah? We don't do indicators. I feel like TradingView, I feel like the industry does not support smart money traders. I'm telling you, we're gonna boycott their ass. I don't feel like they support us, man. I'm just playing. They do got some smart money indicators in here. But listen, y'all, I done seen a couple people with these ICT indicators, and I'm gonna politely ask y'all to take them off, please. All right, like if the data run like there, I this is honestly my first time seeing this. Wow, look at all them indicators, dude. This one could be interesting. I just used the regular one, the one that was like made a long time ago. Let's see what this looks like. Oh hell no. Ain't no way in the fitting up. Uh-uh. Mm-mm. Mm-mm. Let's take that off right now. ICT everything. This motherfucker said ICT everything. Let's see what he talking about. What he got going on? Oh shit. DSY bullish, Euro pound bearish. Why does he just got these pairs right there? What is this? So this is showing deviation flow. Tade. I think you're the one I seen with all these ICT indicators too. Show today's session only. So show current week sessions only. Midnight historical price line, midnight historical vertical line. First of all, he's got London session wrong. I would say from 2 to 5. Really 3. I say 2:30. I say 2 to 2:30. You're gonna start seeing that fuckery that London session gives. And 7 is pushing it. I like 8 better. And I like 11. 8 to 11. 7 is not far-fetched. 7 is okay. Because 7 o'clock gives you time to get on the chart and and watch price and see New York open at 8 o'clock and see what it does. But New York opens still 8 o'clock. Just like technically London session opens at 3. But I say 2 to 2:30 because London close, definitely 11 to 12. This is take profit hours, y'all. Afternoon, 13:30 to 1500. Asia, don't nobody fuck with Asia. Yeah, I don't like it. There's too much going on for me. I still don't understand. Like, all right, so this is showing London session, New York. This is showing PM session. I mean, I guess that's all right. This is showing midnight, midnight, and this is the midnight. That's all right. That's pretty cool for real though. But that just takes away from me actually doing it myself. I want to do it myself. I want to mark up midnight opening price on my by myself. Indicators are making people lazy, y'all. I still like the regular old sessions, bro. Like I like this. It's simple, you know what I'm saying? And y'all see I have it marked up right here. Junior FX Addict. It he introduced it 2019, August 30th. Look at this nut job. Nice too, but it shows the time zones incorrectly. London openings at 4 a.m. Oh, they must be talking about 4 a.m. London time. Because it's not 4 a.m. New York time. People be nitpicking, man. Leave that man alone, bro. He did a nice thing for the community. And this one right here, it's just simple, bro. It's like, it just marks up Sunday opening. That's what I use. ICT everything. Also, fair value gap. Nephew Sam. Nephew Sam. You know, over here in the US of A, we got an Uncle Sam who steals all of our money. But I ain't never heard of no Nephew Sam. Let's see. I don't have Nephew Sam. What does that mean? Did I spell it wrong? I know. Didn't spell it wrong. I got good spelling. All right. Oh, there we go. There we are. Tay, now come on now. You don't need this. You do not need this, girl. It's cool though, no doubt. It does highlight, but it's not gonna how's it gonna how's it gonna show you? How's it gonna show you? See, look, you're gonna get caught up. They're giving you sell side fair value gaps. Well, this is giving me anxiety, bro. I'm just trying to see if it's gonna read it. Like as soon as like y'all know the institutional order flow entry drill, what it looks like, right? How like I want to know if it's gonna show you. Look, it does too. Look. So I guess as soon as this candle closed and this one opened, it highlighted that fair value gap, but price didn't revisit it. Oh, I just caught a glitch in the matrix, y'all. Watch this. It cheated. Watch. Look, look. You see it? You see it? Do you see that? Now watch. It disappeared because it didn't work out. Ah. It disappeared because it didn't work. Oh man, bruh. These fucking coders, these people who be making these strategies, these pine editors, this is coding. Like I couldn't do it, bro. I don't like I'm so green and lost when it comes to this shit. Like true, false, close, open, yes, no, fuck, no. Yeah, you don't need it, Tay. You can identify fair value gaps. You can identify fair value gaps. And it's not really logical to like have every single fair value gap highlighted. Like it's not logical to do that. And plus it like in my opinion, it feels so much better as a trader. Tay said I removed it. Now I feel bad. I don't want you to if it works for you, please do it. You hear me? Because everybody's different. I'm not trying to like everybody's different. And I do understand that I need to watch what I say sometimes because I don't want something to truly be working for someone. I don't want to be the reason that you take something that is working for your mind and switching it because it's something I do. And then you become inconsistent. You see what I'm saying? But there's just something about like I'm just giving my opinions. So I'm just stating that for the record. Like there's something about identifying a fair value gap and price reacting from it. And you identified that. You analyzed the charts, you identified that, and you traded it successfully. You know? It's just something about it, man. It feels good. It really feels good. And having so many fair value gaps on your chart like that could definitely be confusing. Could definitely be confusing. You're gonna have sell side fair value gaps, buy side fair value gaps, all on the chart. You're gonna be like, which way do I go, George? Which way do I go? Nah, but let me see something. I want to see what it looks like. This motherfucker gets paid 500 coins. How much is that worth? $5? Hmm. That's cool. Hey, look, man, y'all do me a favor and go follow me on TradingView. Cause like I want to kind of start I posted, I think I posted one analysis on here. And it didn't play out. That's my fucking luck, ain't it? Let's see. Cause look at what people be posting, man. And they get so many like they getting money from this shit, dude. People pay them. And they get, these little boosts and shit. It's like a social media almost. I want to find like my profile. Here it goes. So two of them. I posted two of them. And they literally make you give a detailed strategy. Price trade up into a weekly sell side imbalance. So my bias this week is bearish. I wonder if it played out. Hell no. It damn sure didn't. It blew right through it. That's what I get for trying to post a 15-minute setup. Yeah, I mean, it eventually came down here and hit my target, didn't it? It just overshot it. I was trying to pick a top. I didn't get no clear shift in market structure right here. I shouldn't have sent that out. Hell, but ain't nobody reacting to it. I got two little boosts. Now I got three. Play with it. Awesome zones, dude said. And this one played out, I think. I don't know if this is that. I remember this though. I remember these set of equal highs. I remember this. I remember buying NASDAQ as it traded up into this area. But I'm not actually, I think this area did not ever get revisited. It didn't come back down into that fair value gap. It just eventually like traded up into this area. All right. That's what happened. I was targeting these equal highs, this imbalance up here, and I wanted to see price come back down first and then go, but it didn't. It just opened up that next day, took out them relative equal highs, and then went bearish. But I definitely predicted these two moves were very easy to predict. Them two. So I'm 0-2 on TradingView. So that's not good. I need to get on here and show them what I'm really fucking made of. Only got one follower, man. Y'all follow me though on TradingView. If y'all have a account on TradingView, PR Power 91. Is Jordan on here? I'm about ready to. I'm about ready to get off in his. Cause first of all, we gotta do a session, Jordan. Second of all, look at what he does, right? He posted this during London. That's how I know he's still trading London session. After we already talked about this, Jordan, I'm holding you accountable. Look at him. He says, "What are you seeing on the indices? Looks to me that SPX is going to go bullish towards the weekly fair value gap." All right. Keep in mind that about 4 or 5 hours prior to this, we was live talking about it. And I ended up posting it late last night at like 1. I posted it at YouTube at like 1 a.m. You got to tune in, Mr. Jordan. Tune in with me, bro. Like you have to submit to a process, all right? You have to submit to a plan. And this is what I'm here to help y'all do is to submit to a plan, okay? All right, how I'm gonna get back to my charts. Thank you for adding me. Um Technical says sale. Look at this guy. Look at this clown playing both sides of the marketplace. You can't do that, bro. That is not fair. Support and resistance. Oh God, he just said support and resistance. I feel I'm getting claustrophobic, bro. Get me out of here. Get me out of here, man. Charts. There we go. All right, y'all. Thanks for adding me. I'm gonna try to post some analysis on there. See if I can't get some followers on TradingView. Y'all see what we're going for? Here's that target right here. Oh shit. So if y'all want to try to get in on a pullback and ride price up, we're very close to the target. Um, could very well possibly get up into this area. So I'm just saying this is the next draw on liquidity. I would like to see it get up 20 to 30 pips above this old high. So this is what I typically look for when price is about to run out an old high. This is what ICT talks about. This is what is liable to happen. Ten, 20, 30 pips above an old high. It's just another influence for y'all. And it's legit. Don't believe me? Check this shit out. I was just showing Chris this last night. It's fire. So right here, let me see if I can zoom in on it. I know it's probably hard for y'all to see. There we go. All right, so and this was like a year ago, over a year ago. I'm still doing the same thing. Um, right here, we got this accumulation during Asian, that Judas swing up into a fair value gap. See that? High of the day, London session. Here's the POI. I don't need to be selling from up here. You see what I'm saying? Although I had this marked out, I understood that this is what I want to see happen. When I woke up, New York open, I have my current dealing range from this high to this low. You throw a fib on that, here's your ICT New York open kill zone. I enter inside of this fair value gap right there. suffer a little drawdown. Stop loss safely above this high. And note what I did right here. You see 10 pips below this low. That's what I wanted to see happen. So I have my entry mapped out. I have my stop loss mapped out. I also have my exit plan. I understand that these are relative equal lows. So I'm gonna monitor the trade, close partials, but this is my final target. And I want to see this happen. I have it marked up right here, London close. This is what time I want to see this happen. Right here, I wanted to see GU take out liquidity and drop 10 pips below old low at London close. Have my TP resting there. Okay. Now, it's y'all, I'm telling you, like structure, discipline, having things mapped out to the T. And all this is stuff that I learned, and it's stuff that I'm trying to teach y'all. I talk about often how London closes take profit hour. And London close can also be an opportunity for a kill zone trade. London kill zone. London close kill zone. It's a thing. All right, so let's go over here. Let's open original and let's zoom in. Right? It's just a different time frame. It's a 30-minute time frame. This was a 10-minute time frame because this is what I stem my entry off of. So this is roughly 10. It looks like I was a little bit off, but this is roughly 10 pips. Actually, if I would drug my tool there to the actual low, then I believe it would have been perfect to the pip. 10 pips below that old low. And look what time it occurred. 12 o'clock, London close. Look what happened at 12 o'clock. Take profit hour. We pull back. I really can't remember what price did after that, but I don't care because I was out. New York open kill zone, London close, take profit. Man, tell me that shit ain't fire, bro. That shit is fire. I don't care what nobody says. That shit is fire. It's really that simple. And like I was trading fair value gaps back then, you know? But look, before I got really, really involved in fair value gap entries, guess what I was doing? Y'all gonna love this. Why does it keep doing that? All right. Before I got involved in fair value gap entries, I was just strictly trading New York open kill zone, time and price. So I would do something like this. I would be looking for price to get down into the kill zone level at New York open. This is a dealing range. Time and price. That simple, right? I mean, I would also look at all right. I used to be real big on doing this. Let's drop down on a lower time frame. Um so I used to be real big on doing this. I used to want to see a day of expansion and I would get in as price retested that expansion. So I would use my fibs. But it was basically solely a fib, like a Fibonacci thing, bro. Honestly, where the F did it go? There it goes. It was basically like a Fibonacci thing. I would get my current dealing range. Price would be in the middle of a retest. Like the swing low has to be formed, right? And I would simply put my sell limit, straight limit orders now, right around that 62% retracement level, stop loss at the high. I would definitely try to narrow down. That's a large stop loss. I would definitely try to narrow that down by dropping time frames. But I mean, entering a trade like this with this mindset, you're gonna have a large stop loss. I've always had this 70.5. I've always had that on my fib though. I adopted that from ICT, and I noticed it's just something that he does. Everybody else uses what is it? 69, or what does everybody use? What's the most common thing? I know it ain't 70.5. Yeah, 618. That 70.5. I mean, it's just a small adjustment, right? But amazingly, it's crazy accurate, right? Like, I know I'm not the only one who sees that shit. So, and look, the difference between 62% and 0.65 golden pocket. What 0.65 is kind of like in between 62 and 70.5, I'm assuming, obviously. So this is approximately this is 13.4 pips apart. I don't know why. That's how he decided to do it, but it was what it was. But anyway, this is what I would do. Missed that one, didn't I? But for real, it was something just like that. That equilibrium spot is powerful too. You have a swing high right here, right? But you also have another swing high right here, which is a significant swing high. That swing high stands out, right? And if I would have went with that swing high opposed to this one in this scenario, then it would have did right. I'm gonna tell y'all something else I used to do. Hey man, that Fibonacci shit is everywhere in life, man. It's not like in nature, flowers, waves, the human face. It's pretty interesting stuff, and that's a fact. That's crazy that you brought that up. I dug down into that rabbit hole a couple years ago. Trust me, I know. I'm gonna tell y'all something else I used to do too, right? Because ICT, he's got a video on YouTube from like 4 or 5 years ago. I talk about it often. And in the video, he explains how you could approach the weekly profile from a swing trader's perspective. And if you are bullish, can buy at market open. And I think he says, I don't know for a fact what size stop loss he said use. I want to say it was 150. I want to say he said 150. That's what I want to say. And I almost want to go, let me get the market open price. All right. I want to say he said 150, and I'm damn near ready to go check because that's crazy how it literally dropped 150 pips before turning around. But it's somewhere around that area. It could have been 150, it could have been 200, I don't know. Place your stop loss below and your take profit 300. I want to say he said 150 and 300. I'm not sure, but I've traded like this before, y'all. Swear to God. And also I would use, not only would I do this, I would also use the so I would not have been buying, like this is a bullish bias. So let's take this one for example. It's not really a good risk to reward. It's not really a good example, but I'm just showing y'all what he was talking about. And he really is a smart man. So he was saying that if you are bearish and your bias is bearish, you could either enter at market open, place your stop loss a certain area, you know, it could be above this high, you know. But I really think he just said a set amount of pills. But anyway, you know, you would have suffered drawdown for a few days, but you would have ended up in profit and closed in profit. Um, but another thing that I would use as a confluence is I would, for example, use my most recent swing high down to my most recent swing low, and I would frame my entry off of this area, right? So let me hop on a 4 hour, right? And clean up the chart a little bit. I really appreciate y'all kicking it with me too, man. I love y'all for that. All right, so this is basically what I would do. I would have that weekly perspective in my mind, right? And let me throw the weekly thing on here. So at this point, the week will open and I would be anticipating a retracement up into the kill zone area. Just like that. It was a very frustrating time in my trading career. Needless to say, it was a frustrating time, but I hit a lot. And, you know, trading ICT concepts, the free YouTube concepts, I'm not talking about mentorship. I'm talking about shit from years ago. I turned a $500 account into 5 figures strictly off his free YouTube concepts. And I was trading off of an old Toshiba laptop, and I was living in my sister's trailer. I was living in a middle bedroom of a single wide trailer. It was a 2 bedroom single wide trailer, and I was living there with my sister for free. Me and my wife. She let me get my shit together. I stayed there for 6 months exactly. And I focused on trading the whole time. And I came up. I like I mean, I don't without going into too many details, like I started with a $500 account. I was getting unemployment, right? And I used the unemployment money to fund my trading account. And I turned that $500 account into five figures. I remember I withdrew 20 grand out of my account and still had plenty in there. And me and my wife moved to Macon, Georgia. We got a beautiful home over there, and we bought us a car, and it was great. I won't never forget that, man. And it was after then that I started, getting confident in myself. And mindset is huge when it comes to trading, y'all. You got to have confidence in yourself, man. And after that, I started really feeling like I was mastering these concepts after I got into ICT mentorship. So I decided to, I wasn't like a lot of people, bro. A lot of people was taking his videos and trying to sell them. I didn't do that. I have so many ICT videos, bro. I think I'm kidding. Like, I have so many. Each one of these folders is slap full, and I have another folder. I have so many ICT videos. Videos that I'm talking about old ICT videos all the way up to the new and everywhere in between. When I tell you I dug into this man's shit every single day of my life for a long time, I put in the work, man. I put in the work, y'all. And like, I don't know, it's just kind of frustrating to try to get people to see the value that I could bring by teaching another man's strategy. You know, I'm never gonna sit here and say that I could teach you better than he can because I can't. I just know that people, I mean, how can I say it, man? Like people just learn different ways. And if I could help somebody learn by the way I teach, then that makes me happy, brings me joy. How were you getting it? I was in ICT's mentorship, and in the years that I wasn't in his mentorship, I was buying videos from people that were in his mentorship. That's how I was getting them. So check this out. All right. All right. Here's the 2022 ICT mentorship. In my opinion, I feel like he should have waited on this, and I feel like he should have started here. This is where I started. Not, I didn't start in 2016. No, I was in prison. But what I'm saying is when I first started, after digging into this stuff, pattern recognition, optimal trade entry, basic ICT, mastering high probability scalping, ICT market maker, Forex series, pattern recognition. Again, this is the upgraded version to this. He's got 20 videos in here and it's very good stuff. ICT, optimal trade entry, pattern recognition series. The optimal trade entry is simply this right here. This is an optimal trade entry for those of you who don't know. It fell short right here, but he talks about a lot how he will measure the volume of the candles, especially when you have long wicks. This is optimal trade entry. These two levels right here. Pattern recognition. So in those series, he's basically teaching you how to recognize New York Open prices in that optimal trade entry area at New York Open. And you would target this high right here. So you would literally be taking profit right now. I mean, I think about this stuff like it's cemented in my head. That's why I bought down here, you know, and riding price up. Matter of fact, let me go ahead and close the parcel right here. All right, so back to what I was saying. If I could go back and tell myself what I know now, very interesting. And these are the type of videos that people don't want to watch because it's not really chart related. You know what I'm saying? So real quick, we'll just briefly go over what he was talking about. Where would I focus? Don't seek the approval from others, family, friends, and coworkers. This man, he was speaking to my soul, y'all. I'm telling you, I was being, you know, criticized, bro, from my folks, from my girl, from my immediate family. Like, go get a real job. Like, you just got out of prison. Like, what are you doing? You know, like, for 6 whole months, I was living with my sister, dude. And that was so uncomfortable for me because my whole life, like, I had my own place when I was 15 years old, 16 years old. I was selling weed, pounds of weed, like, no small shit. I don't know. I mean, I could tell you how I got involved in it, but it's irrelevant to what I'm trying to say. Like, I always been independent because my family wasn't shit. My mom and my dad, they wasn't shit. No, I didn't have no guidance. Why do you think I ended up doing 5 years in prison? No guidance. I don't blame them, but I mean, reality is that, you know, I didn't have no guidance. I was free to do whatever the fuck I wanted. So, you know, it just don't seek approval from other people. And this, like, what he's saying is, you're gonna have people tell you you shouldn't do this because it's not paying off right now. You're putting all this time and money into something that's not paying off. You shouldn't be throwing money at the markets until you know you're good, right? Trade demo consistently for a few months and then throw money at it. Don't make the mistake I did. I threw money at the markets trading retail logic, retail strategies, right? It was a bad mistake. So if I could go back and tell myself what I know now, I would definitely say, like, do not trade live funds until you're fucking ready. Like, nothing wrong with demo trading, bro. I still do it to this day. And I got plenty money in my account. it's mental, bro. Like you got to get in sync with the marketplace. So demo trade, get in sync with the marketplace. So don't seek approval from other people. They're not gonna understand. They're not gonna agree with something they don't understand. And certain people will start to feel like you trying to act like you're smarter than them or you're better than them because oh you're in the financial markets, you know how to do, like people are weird, bro. People like when I get around people and talk about this shit, I can't. I've learned the hard way that I literally can't get around anybody in my life and talk about this shit. Why do y'all think I'm sitting on here talking to y'all like for hours, bro? Because I have to talk about it. I have to vent. You know, I have to vocalize what's going on in the markets and what's going on, the psychology aspect of trading, right? So also don't seek approval from other traders because all of us are different. You know what I'm saying? We have one common goal. We have a couple common goals, right? We're all trying to learn ICT concepts. We're all trying to be financially free. And I wanted to be in a community of like-minded people. And I wasn't, I didn't feel welcome in EasyFX or Abundance Trade House. I always found myself being outcasted, bro. I always found myself being the black sheep in those groups. And I believe Dustin was in one of those groups at the time that I was. Dustin, or I I'm not sure, but I believe that me and you was in either Abundance Trade House together or EasyFX together. And I had conflicts in both groups. Um and it's crazy because in EasyFX, the conflict that I had was from the owner of EasyFX, Danny Reardon. And it went from like it literally went from him shouting me out to like video on his videos. Like Ryan is an amazingly consistently profitable trader. Like Ryan is like very like he hits, bro. Ryan knows what he's doing. But he went to realizing that I wasn't using his shit to hit like I was, right? He went to realizing that. So that admiration quickly turned to like a whole different vibe. He didn't admire me no more. You know, he went to like, man, I literally got on a three-way Zoom call with him and the person who funds him. You know, he's trading a $1 million account, a multi-million-dollar account, but it's not his money. Danny Reardon's trading somebody else's money. It's not a prop firm, it's a private investor. And Danny got me on a call with him and we talked for like an hour. And these cats was really about to invest in me. And I wish it would have happened. Like that shit would have took my trading career to a whole nother level very fast. Instead of the slow grind that I ended up having to do. You know, slow grind, and built myself up by myself. In retrospect, I'm glad because I'm independent. I did this shit on my own and I didn't have nobody financially backing me, you know, but it went from Danny trying to get his investor to fund me to me being X'd out and kicked out of his group. But anyway, don't seek approval from other traders. Like don't post charts and say, hey, what are you seeing on the indices? You know, like this right here, he's unknowingly second guessing himself. This is something I had to learn, man. I used to be in a PeezyFX group chat, Abundance Trade House group chat, doing this same very thing. I would analyze my charts and I would send the setup out, right? And I'll be looking for approval. and like, and if somebody did chime in and tell me that, oh well, I see this differently. Well, I think it's gonna do this. I think it's gonna do that. I would literally just second guess the fuck out of myself and wouldn't even take the trade that I initially took my time to analyze. So that's another thing that really helped me change, man. Is not seeking approval from other traders. Let me play through this. Let me play through this ad real quick.
Something surprising happened. Today I'm going to teach you how to crochet.
Market, I hope it goes.
Family, friends, co-workers, strangers. Where would I focus? Learn risk management well first. This right here is coming from demo trading experience, right? You can get your lot calculator and all that shit. I never used it. I tried it and didn't like it. You know, hard headed. Had to learn. I just chose to learn a certain way, bro. I remember at once upon a time I used to look at lot sizes like $1. Like, yeah, I just put $1 on this trade. You know, like I remember that shit, bro. It's hilarious now looking back at it. But you know, one lot, you're buying so many units of a currency pair, man. And just don't try to get into all that. Like, it's just spreading yourself too thin and it's unnecessary to look at the math behind it. Like one lot equals I'm I'm not 100% positive, but I think one lot equals 1 million units of currency. So I have 480,000 units of Euro USD currently. So that would be roughly I could be wrong. I know for a fact it's either 1 million units of currency or 100,000 units of currency is what one lot equals. But fuck all that. That's what I'm trying to say. Fuck all that. Get on your demo and practice. Okay. Your leverage, because honestly, you could place one lot on a demo account that has 1 to 100 leverage and turn around and place that same one lot on an account that has 1 to 500 leverage. And I'm pretty sure you won't get the same pip value. I'm pretty sure that's how it works. Could be wrong. Correct me if I'm wrong. I mean, I've been so used to trading on a set leverage that I could be wrong, but I think that's how it works. So just get on there on your demo and practice. That's how you're gonna learn your risk management, man. And you know, people tell you risk 1% or 2% of your account, but y'all might not understand me right now. But when y'all go to mastering this strategy, y'all gonna realize real quick that that industry that industry saying of risking 1 to 2% of your account, you're gonna start to look at that like, yeah, okay, y'all do that if you want, because I'm confident in what I got going on, you know, and like getting in sync with the marketplace, man, and like literally entering off of a legit fair value gap. You're gonna place your stop loss if it is indeed a legit fair value gap. Your stop loss can literally go right like below the low of the fair value gap. Let me put the lines on there. All right, I had to mute somebody because of background noise. But so here are the lines to the fair value gap, right? You can enter at the top or at 50% for argument's sake, because this is basically where I like to enter at. And I would stack another position at the 50%. This is what I do, right? So y'all might think I'm crazy for this, but a lot of I don't want to steer y'all in the wrong direction here, but sometimes I won't place the stop loss right away. Stop losses always go on my trades now, don't get me wrong. But for example, if I know that there's no red folder news and it's just slow, steady price action, I would execute a market execution trade, right? And will not place my stop loss immediately. Now, if price starts to go against me, I'll hit the close button. Like this mouse is quick. I'm quick. You understand what I'm saying? But I understand that the market can be quicker, especially with red folder news. That's why Forex Factory is always up here. I always got it accessible. But I would place a trade, and once the market starts to respect my fair value gap, I'm already knowing in the back of my mind before I enter the trade, I'm like, this fucking trade is gonna fucking play out, period. You know what I'm saying? But my stop loss will immediately go there. That's a 3-pip stop loss. Once price comes down, now let's go over here to a 5-minute and watch, like, matter of fact, let's go to a fucking 1 minute and watch it play out. Now, I'm not getting off track here, y'all. I'm still talking about risk management, okay? Here's our POI. The fair value gap was formed at this minute. Okay? Just bear with me for a minute or two. You earn the trade. You earn the trade as price trades down into the fair value gap. You're suffering drawdown. You see a 1 minute fair value gap, and it lines up with consequent encroachment, right? It lines up. That's just extra confirmation. Price respects that 1 minute fair value gap, and it pops out of it, right? Guess what, bro? Fuck risking 1%. Fuck risking 2%. I'm gonna drop some lots, dog. And I'm not one to risk something that I work very hard for. You understand what I'm saying? You just have to be logic. Like, don't risk more than you're willing to lose. But at the same time, once you get this concept down pat, bro, telling you, you're going to gain that confidence. And a trade like this, to where I don't know how y'all trade. You know, I do realize that a lot of people use micro lots. You know, a trade like this will eventually start looking like this. 5 lots, 10 lots. I mean, damn, dude, like, look at this stop loss. I mean, I wouldn't have this stop loss in place as price was trading down. Why? Why not, Ryan? That don't make sense. You're being reckless. I'm not. I'm chilling. I'm just chilling. Because price could completely fill in the fair value gap. A logical area for your stop loss, if you just have to set it right when you place the trade, would be below this low, or right here, below that 15-minute order block, below that. But as soon as I'm watching the 1-minute time frame react from this higher time frame POI, and bro, you know what the fuck price action is gonna do when it respects that fair value gap, right? You know what it's gonna do. Look what it did. We had a displacement right there, right? And more times than not, this is what you will see occur. Price dig down into their fair value gap and then aggressively react from it, creating a fair value gap, a displacement. Price traded right back down into it. Although it didn't dig down in there like we would like. Coincidence or not? 97.29.7. 97.29.7. Coincidence or not? Is that a coincidence or not? I think not. I bought right here. Right there. You're probably thinking, why didn't you buy right there? I can't remember, actually. I can't remember. If I trust and believe, if I would have seen it, I would have entered right there. So I'm guessing that I got in right when I realized it, you know? And that's okay. You know why? Because I have confidence in what price is doing, bro. I have confidence. Does it seem like a logical area to buy to y'all? Probably not. But let's see. We're 6 pips away from the original POI. 6 pips away. Roughly 7 from my entry. So what? Why not? I mean, I'm just trying to get y'all in the right mindset. You hear me? Have confidence, man. This is the trade that I sent out to the free members. In one position, got stopped out. I had 2 positions. So one got left on, one got stopped out. So I had a runner and I added another one here. Let's look at where I entered at right here and why. It's not about the exact entry price. You see what I'm saying? Look at what I was doing though. Like it makes sense. It fits the narrative. It fits with what I teach y'all every single day, right? There's midnight open. There's midnight open right there. Okay. Price trade. Let me get back on 5 minutes. Sorry about that. We have our purge of sell side liquidity there. You see me jumping the gun, right? I jumped the gun. But this is a decent scalp. I don't care what nobody says, bro. This is a decent trade. This is the type of setups that I want you guys to get used to taking it first, you know? Because, I mean, man, look, bro. Don't take my word for it. ICT just dropped a video recently. It is actually part of his 2017 mentorship to where he talks about, you know, these small gains, these 10, 20 pip trades. And if y'all are familiar with watching ICT trade live, y'all do realize he's on a 1 minute chart, right? And y'all do realize that he catches small price swings. And this is a very professional trader that we're talking about. Okay? Don't get caught up in that fantasy to where you feel like you got to. This is a beautiful trade. You know, this is a beautiful trade. Running fucking 80 pips right now, dude. And it's about to turn around. I mean, it's look what time it is, 11 o'clock. Close all trades, bro. It's 11 o'clock. Got hella pips for the day. You know, close the trade. Matter of fact, let me get over here real quick on my account and close. I feel like we're getting into some good psychology stuff right now. But real quick, y'all, I think this is perfect. I think this is perfect, y'all. I'm not even gonna hold you. I like this. And we almost missed it. If y'all are interested, take flight, because I am. I'm taking flight on that one, bro. Y'all hold on 1 second. I'm taking this trade on my live account. Y'all notice I just placed a trade, right, on my live account, and price is right here, right? Price is right here. So it's already done left the fair value gap. Don't fucking matter. Get in it. I mean, like if y'all trading live funds, like do what you feel comfortable with. I don't want to be the reason y'all lose money. I'm just telling y'all what I'm doing right now, and I'm telling you it's not too late. If you trade in live funds and you want to wait, like look at the man, just look though, like look at that. Why didn't we enter right here from the POI? Y'all remember when I came up here and marked up 50% of this order block? I guess I deleted it. Or maybe that was on another fucking pair. I don't know. I think yeah, that was on Euro USD. But look, 50% of that order block, right? %50 of the hourly order block. Let's drop down to the 15-minute. That balanced price range that I was telling y'all about, right? Which is right here. Balanced price range. Come on, bro. Beautiful. Y'all be cautious though, okay? Because it is Monday, y'all. Be cautious. Don't play. Don't be playing around. Watch that 1 minute time frame. You know, I wouldn't drag your stop loss down above this high yet. Wait until this low is taken out. And wait until we pull back before. So you want to see this low taken out, pull back, and price react from the retracement level before moving your stop loss down. Before moving your stop loss down to here. Because it still could very well play inside of this fair value gap. It could take out this high, completely close in the fair value gap. It could trade up to 50% of this order block. But I'm telling y'all right now that if we get up above 50% of that order block, I'm closing. I don't trust it. I don't trust it. This is the order block that I want to see respected. Although this isn't an order block. This ain't even an order block. I'm tripping. But basically what I'm saying is this expansion down, I want to see price respect that expansion down. But I'm just forewarning y'all that price very well could run out a small area of buy side liquidity before trading lower. Okay. And this is a Monday. You have to keep that in mind because y'all know that we always anticipate for the high of the week to form on Tuesday. So we are still inside of that accumulation manipulation. Although this is exactly what I predicted during my weekly watch list. It's literally playing out. Accumulation from market open to London open. London open, what is it? Manipulation straight into our POI. And I said that I wanted to see some type of bearish structure form after it hit that POI. So it hit the POI. We reacted. Pairs of buy side liquidity. Drop, pull back, fair value gap. If this wasn't enough confirmation, this should be. Displacement, shift in market structure, identify fair value gap, next draw on liquidity. You have a set of equal lows right there, right? The low of Asian session, this period of consolidation. Let me get back up on the higher time frame. I'm just going to swap these two out. I'll do it like this. Sell side liquidity resting below old daily lows, always. Looking good, baby. Baby. My TP is 10963. Seems logical. Let me see. 10963. I think that your TP is way too short. Oh, you said your TP1. Look, bro. I know a lot of people do that, right? And I noticed a lot of retail traders do that, right? I used to do it. This is what I'm talking about. They do. And there's nothing wrong with that. Please don't get me misunderstood right now. I'm not saying there's anything wrong with this, but I'm gonna give you my opinion on it. So, Mamba FX, if y'all ain't familiar with him, he is a very successful retail trader. Okay. And he does things like this. He runs a signal service, and he has very low risk to reward ratios and a very high win rate, right? Because of things like this. He'd be like, "Oh, TP1 hit, boom." That like, don't get me wrong, bro. Like, Mamba FX is a very good trader. I honestly don't know how he does it, bro, because of the way he trades. He trades breakouts, trend lines, support and resistance, right? So don't get me into I watched this motherfucker make $80,000 a day, $100,000 a day. You know what I'm saying? And I just don't. I can't. I can't wait until I'm making 100 grand a day. You hear me? I don't think that I'm mentally ready for that yet. Like, y'all might think I'm crazy, man, and y'all might not believe it, but there's levels to this shit. You might think that you're ready for that $100,000 account, funded account, but trust me, if you haven't successfully proven to be consistent on a 10K funded account or a live account, whatever, you're definitely not ready for that. The mental aspect of it is serious, bro. When you have live funds on the line, right? And you got kids to feed, you got bills to pay. It's a different ball game. Psychologically, it's a different ball game. So be careful. And please respect due process. That's all I'm saying. Is respect due process. And if anybody wants me to elaborate further on that, I mean, it's pretty much self-explanatory, you know? Um, Let me get back into this. I already talked about that. Learn to limit trade frequency. I'm teaching y'all this very same thing. Y'all just don't know it. I'm begging y'all to only trade New York Open, right? I'm begging y'all. This is gonna help to limit trade frequency. It's gonna help limit how many trades you take. And like, I know y'all seen the amount of executions, right? 1, 2, 3, 4, 5, 6 trades on NAS 100 since yesterday, since last night around midnight. I don't encourage this, okay? Like y'all will know when you're ready to do things like this. This is called high frequency scalping. It's something that I learned from ICT. It's getting in sync with order flow. Oh, you taking the futures contract? I mean, that's fine, bro. Like, I'm just saying, like, don't I mean, if that's the area you want to close partials at, that's that's fine. Like, that's good. That's a good habit to get into, is always pay yourself, you know? But my whole thing is, I was talking about it in that video that I posted on my YouTube, where we was in that Euro USD trade. It was this video right here. It was a beautiful day. We was in this Euro USD trade, right? And I'm gonna take y'all back to the trade. Where was it? Damn it. Right here. There it was. This is what I was talking about, Tom. Do you not trade the futures contract? Every once in a while I do. Every once in a while I trade the futures contract. In the futures contract area right here, you will see right here. Here's a US SPX 500 futures contract trade that I took. That is actually the last time that I traded a futures contract, was a couple months ago. So I do have access and I can trade it, but I'm staying in my own lane. You know what I'm saying? Like, I pay attention to ICT and what he's doing, but I'm not trading futures contract for a very specific reason. And it's because I don't want anybody to ever think that ICT is holding my hand day by day. You see what I'm saying? I don't keep up with his little hints and shit that he posts on Twitter. You know what I'm saying? Every once in a while, like on this day, this could give you an idea of what SPX 500 might do, meaning SPX 500, the Forex pair. Although he is referring to SPX futures contract, let's remain bearish on most FX pairs. Different week, same shit. I just don't want anybody to think that I'm getting my trades from him. I'm not. That's one of the main reasons I do not trade futures, to be honest with you. So we took this trade right here, and this was exactly our entry from this fair value gap. So Tom, this is what I was referring to when you was talking about TP1 and TP2 and all that, right? So when we was in this trade right here, there was a gentleman that was on the call, and he let it be known that he was closing his trade right here. right? So price was looking like this, and he was happy, and I was happy for him, 100% happy for him, right? But I immediately went to getting hyped up and excited, you know what I'm saying? Because I was like, bro, do not ever limit the potential of a fucking banger. You hear me? Don't ever limit the potential of a fucking banger. And my analysis stems from higher time frame points of view, right? The higher time frame analysis. Although we got our entry from a 5-minute chart, but we the weekly range, the weekly perspective, that's where this entry come from. So don't close your trade and limit the potential, because we know what price is targeting. Previous day's low at least. This is a more logical area to take profit at this trade. Now, I specifically, before the trade and during the trade, talked about the areas that I was looking at. All right. And these are the areas that I closed partials at. Previous day's low, this daily low. I don't know if it was that one or this one. There's liquidity resting below each daily low, right? So look, he closed his trade way up here. Look at what he missed out on, and look at what we caught. And look at what time I closed this trade. What time did I close the trade, y'all? What time is take profit hour? London closed right here, 11 to 12 o'clock. And, you know, I understand, like, I'm in a swing trade as we speak still on Euro USD and GBP USD. I just want y'all to understand, like, there's different styles of trading, and you have to understand, if you want to be a scalper, then this is your window from New York open to London close. A swing trader, you have a bigger target. You got to hold for longer. And in doing so, results in this. Look at that. This was this was it. This was the bias that week. And then last week it was funky. You know, we got one final push down, and after that, it was a retracement. And now I'm hoping to see the final of the retracement. So look what I said, y'all. Price is liable to run out some form of liquidity. This high right here. If it disrespects, I'd be very, very cautious on watching it. I'm hoping that it's just running out this buy side liquidity. Yeah, man. A lot of people get caught up on the lower time frame. Let's see. Okay, bro. No, that was going to be my next question. What you? All right, cool. All right, so look, you Look, this is a perfect example of getting caught up on lower time frames, bro. The high of the week is not, I mean, it's not that time. Y'all see what I'm saying? It's a mistake. This trade was a mistake. I would get out of it. I would wait and see if this area is gonna get disrespected first. This is what getting caught up on lower time frame looks like, y'all. Perfect example. The trade is not invalid yet. Y'all will know when it's invalid. I mean, I honestly think that it's invalid, but there's still this little seed, mustard seed of hope that the trade will go in our favor. There's a small fair value gap right there at the 50% area of that order block. Y'all can see it. I highlight it. Right there. So it's just little things like this that you have to pay attention to. I don't want to panic and close the trade right now because, like I said, it's not invalid yet. I made enough money since last night on my live account to not trade for the rest of the week. I kind of want to put. I already talked about this before, and I don't really like getting into profits. You know, like I don't never want to discourage anybody. I don't ever want anybody to feel any ting of envy or jealousy or like damn, like why can he do it and I can't? Like I am a fellow trader. You understand? And like even to this day, right? Mamba FX, for example. Yeah, I know y'all hear me talk about this dude. And you know, I don't pay attention to his strategies because, like I said, I don't understand it. But this is where I got the idea of flipping the small account. A $50 account is currently around $500 right now. And I want to flip it. And he turned $11 into $1,100 in 12 hours. That's insane, dude. That's fucking insane. You hear me? And this guy is he how can I explain it? He's no bullshitter, dude. He's a young fucking boss, bro. And y'all, like please don't go and try to trade his strategies, y'all. I've tried it back when I first started. It don't I can't I don't know how he does it, man. It works for him. So salute. I salute this guy. I look up to this guy to a certain extent. You know why? Because he's fucking 21 years old, maybe 22, and he has two Rolls Royce Maybachs. He has a Lamborghini Urus, and he lives in a $3-4 million mansion. You know, and he had all of this stuff by the age of 19. And now he's 21 and he's better. He just recently, within the last 6 months, 9 months, put $1 million into an office. It's not inside of his home. It's a separate building. So, I mean, you got to respect it. A $5 million mansion. He shows multiple days to where he pulled 6 figures out of the market. How I made $250,000 in one day trading Forex. Insane strategy reveal. Like, bruh, but keep in mind, like, he took off on YouTube. Like, I don't know how he does it, bro. I honestly don't know. He turned $5 into 10K right here. Y'all don't go look at his strategy, bro. That's not what I'm trying to show y'all, man. Cause I promise you, y'all won't find consistency on trading this man shit. You just won't. ICT strategy is upper echelon. It's the top. It's the best strategy, bro. And this is coming from me, somebody who's been doing this for years, and I've tried everything. I've tried everything. Bollinger Bands, moving averages, support and resistance, breakout, all that, bro. I've been a part of all that. Abundance trade house order block theory, Wyckoff, supply and demand. I'm telling you, man, don't nothing compare to ICT. But I look at this guy and I see all he does is flash and flaunt. And he's smiling in people's faces, bro. And you can tell by his attitude that he's cocky, arrogant, 62K in one trade. Like, all this is great. That's amazing stuff. But though I wasn't raised like this. You hear me? I done had a 9mm put in my mouth over a couple $1,000s. Like, I'm not that type of person, bro. I'm not gonna divulge my location. I'm not gonna divulge, you know, anything personal, bro, because I know what that can lead to. And I got a couple AR-15s in the house. You know what I mean? That I done spent $5 grand on, like, just for the guns themselves. Not to mention all of the modifications, EOTech red dots that cost $800 a piece. Silencers. Like, I got that. Oh, I don't know, man. It's just I don't like divulging personal stuff. I don't want no target on my head. And I made the mistake of intertwining my business with my personal social media. It's a mistake that I cannot undo. If I could go back in time, then I would not have my personal Facebook involved with my business. You know, because there's haters out there, there's jealousy. Tom, where are you from? He said he's never even seen a real gun. Where are you from, dude? I'm from Georgia. Everybody has them down here. Um, yeah, man, but this is just motivation for me, bro. And there's still times where, like right here, for example, this mug made 250K in one day, bro. He's a very risky trader. He's a very aggressive, risky trader. You know, he right here he talks about he's got multiple streams of income. That's great. He's got the capital to risk at a very young age, which is plausible. Like, I mean, it's admirable. But there's days where I see shit like this and I'm not a hater, but you'll be a liar if you sit there and say that you don't feel a bit of like envious and jealousy, right? Like I'm just being 100% transparent right now. I'm being vulnerable right now. Like I'm not a hater, bro. I don't have tendencies to hate. I don't have it in my heart. But it's like a guy that could fucking make $250,000 trading retail strategies. It's insane. When I know for a fact that these strategies here are a lot better. It's just a different style of trading, man. All right, y'all. So, this Nas 100 trade, I'm losing faith in it. I'm not fucking with it. Like this order block here, it looks like the change in the state of delivery of this candle jammed up into our POI, traded down, sell side liquidity in the form of relative equal lows, fair value gap, price pops back up into, right? So I'm just going over this again just to see what went wrong and what's going on, right? So is price playing this fair value gap again? These are things that y'all need to do when you lose a trade. Is it playing in that fair value gap again? Is it hitting the 50% of that? No, it's not. That fair value gap. I don't want to say it's invalid right now. That could end up leaving a wick. So let's look at the 1 minute. Okay, so this push down definitely created some buy side liquidity. Okay. So I'm not marrying this bearish bias, y'all. That's not what I'm trying to show y'all right here. I'm just trying to understand where we went wrong. Look, this area right here is a 1 hour fair value gap that was created at this moment. As soon as this low was formed right here, this is in fact a 1 hour fair value gap. So we got price opening up, trading, opening up on Sunday, immediately trading up, jammed up heavily, creating a fair value gap, came back down into the fair value gap. And now we're very close to this high. So it looks like I fucked up and I apologize if anybody lost any money. Sorry. We'll get it back. This is gonna remain my POI. This is gonna remain my POI. This is Monday's price action for you. This is Monday's price action. Watch this. Let's see if I'm in sync with marketplace like I think I am. Welcome to the mind of a maniac. Do you journal your trades? I used to. I used to journal every single one. Every once in a while, I will go back into my history on MetaTrader and go back and study what went wrong, what went right. But just understand that I'm I'm in that point, I'm in that phase of my trading career to where like I know what to look for. Like I don't really need to go back and journal my trades and like if a trade doesn't go my way, I immediately know why after it happens, you know? Um if a trade doesn't go my way, like this one right here, for example, I already knew that I shouldn't have took it. I knew that it was a risk because it's Monday and that high of the week still hasn't formed. It hasn't gave us enough confirmation yet. Now that price that you said was your TP1, 10,963. That was that was brilliant, bro. The low of that candle is 10,964.6. So you was literally a little bit shy from, you know, like that would have been perfect. If you would have closed right there at the high of this hourly fair value gap, look, there's a fair value gap. That's an institutional order flow entry drill. So basically, we took this balanced price range. My my bias, my short-term bias was correct, right? I bought all of this, wrote it up, I closed the trade, and in my head, I didn't execute a sell up here. But you seen I had the position tool right here. Somewhere up in here. Right? But I wasn't focused. I want to see price red from here and go down. But what you said was 100% correct. It's logic. It was logic to sell from here and take profit here. You said your TP1 was 10,963. Look how close you was. Look how close you was, dude. Like that is great, dude. Like that's I I don't you're Tom. What's your name in Discord? Is it Tom? What's your name in Discord, Tom? Everybody done left except for 4 people. Hey, y'all are troopers. Tommy 10 Billies. Okay. You sent me a DM. I ain't gonna open it in front of everybody, but um that was a great prediction. I appreciate y'all chilling with me, bro. I appreciate it for real. We just vibing, man. This is this is trade psychology exercise for me. You know, getting in sync with the marketplace, getting our minds right. I want to finish going over this psychology. So many people are fixated on from here up, and they're skipping due process.
And I close the account.
Let me let this ad play through.
Seeing you feel pre-approved will never hurt your credit score. With Capital One pre-approval, you can safely
With
Appreciate percent over money gain and loss. So y'all understand that that's self-explanatory, you know? A lot of people get fixated on the cash, on the money and not the percent. We we're trying to compound our accounts. Avoid short term into long term. I mean, just from face value, I need more context.
and you end up into long-term trading. The more likely you're going to lose. And if you have a lot of trades, you're going to have a lot more losses. And losses mount up. And you don't want that to occur.
Hold on, let me
Especially as a
see.
developing trader. You really don't want that to occur at any time, really. But you have to learn to limit your trade frequency. Avoid short-term trading, turning it into long-term trading. When I first started, I had no idea. The chart, you know, 5 or 6 handles in the S&P, and you changed your strategy from it was going to be a short-term trade to now a long-term trade, and that short-term gain turns into a now immediate loss.
Right. So basically he's saying don't marry a bias. That's basically what he's saying. So for example, this is a short-term trade. Y'all seen me execute this trade. Y'all seen it. It was a beauty. I'm about to close partials because this high got taken out. I really want to see if this one will get hit. It looks like that's exactly what it's going for. So basically what he's saying is this short-term trade, if I decide to be greedy and turn it into a long-term trade, it could be a substantial loss, especially if I don't, adjust my stop loss. So I'm currently $1,100 in profit right now. If I decide to not close partial right here, I just did that I literally should have waited until this high got taken out. I just did that on impulsive. But anyway, if I decide to try to hold this trade, then all that money is going to get lost because it's going to retest. And, it's possible that it takes out this high and then melts. That's what he means by that. So now let's see. So now I'll just place my stop loss. I'll take the risk off, leave it a little bit in profit. I made $1,500, hypothetically, my targets got hit. Target 1 hit. Target 2 hit. This is, y'all seen it firsthand, right? An execution, an entry, and an exit, all predetermined, all premeditated. I just want to show y'all, man. That's all. Entry there, another entry there, 2 entries. Beautiful. An exit there and an exit there. Right. Really in the same spot. And look, as soon as I exit, look what happened. This could possibly be another opportunity. I could execute a trade right here, right now, but I'm not. I'm not gonna do that. Why? Because this high just got taken out. That high just got taken out, so it's subject for a deeper retracement. And if you look on the higher time frame, that could be that purge of buy side liquidity prior to the shift in market structure and displacement that we want to see in order to take this thing lower. I just don't know right now. So it could react from here and keep going up, but I'm not willing to risk that. This was more logical. Why? Why was this more logical? Because we had a clear target. That target is hit, so there's nothing up there no more for me to. I mean, there is, like, this high up here could definitely be what it's reaching for, you know? I just don't know because I don't know if y'all have learned anything about high resistance liquidity runs and low resistance liquidity runs. I used to have it in here. I guess I deleted it. So when you have a high and a higher high, this would be, I'm just gonna do this. That looks sloppy. I hate how it won't be straight. It's like pixelated sideways, but um this is what you call a high resistance liquidity run. Now this is a low resistance liquidity run. And what do I mean by that? Hold on. Let me do one thing. Low resistance liquidity. Let me save these. I thought I already had them saved. So this is a low resistance liquidity run because there is a low and a higher low, meaning, hold on, let me get these executions off. It's aggravating me. meaning that once price, it's not gonna meet high resistance. Okay, should not have no problem taking out this low and that low. And this, I learned this from ICT. Being that we have a high and a higher high, it's gonna meet more resistance coming up into this area opposed to if it was like this. Do y'all, does that make sense to anybody? Do I need to elaborate? That would be a low resistance liquidity run. Kind of like what happened here, right? It literally happened right there. There's a high and a lower high. Price ran it. Again, high resistance liquidity run. I hope that makes sense. It's just another little thing another little confluence I learned from ICT. And if you get on the daily time frame or the weekly time frame, I guess NAS 100 isn't a good example because this shit's literally been going up and up and up forever. As far as a long-term investment goes, though, this is actually a very good place to be buying at. Going into 2023, this monthly fair value gap, going into 2023, we're going to get back up here. We're going to hit 17K next year. Guarantee it. We might pull back down a little more, but we're about to go into a reversal. We just spent a year dropping, okay? We're about to spend the next year going up to take out that high. Mark my words now. Look how price reacted. Man, I just realized that. No lie. I just realized that. This is a monthly fair value gap. That's why. That's why. It makes sense now. That's why this happened. So now that bearish bias is starting to seem suspect. Not really though. Not until some significant structure has been broken. All right, y'all. I gotta get off of here, man. I've been on here too long. I've been on here too long. Hold on. Be content with enough. That's basically saying don't be greedy. Y'all need to learn how to risk, right? Learn how to risk your money and be content with enough. So basically, when it comes to trading, less is more. Like y'all just seen this trade that I took, right? It was right here. Something as simple as that with the right risk management could literally set you up. Trades like this could set you up for life. That's basically what he's talking about. All right, y'all. I'm getting kind of you know, restless, man. I need to eat. Getting a little lightheaded. I need to eat. Get me something to drink. Go use the bathroom. I appreciate y'all hanging out with me, man. This is gonna make for a good video, for real. So I'm gonna make sure I post it up for you guys to go rewatch. Man, I love y'all, bro. Peace out.